Hi, this is the second lecture of financial management. I will explain about the business plan. The purpose of business planning. The COVID-19 might cause damage in the business for a long time. So at first, to understand how much your business has been affected. And secondly, understand how your business can withstand the situation. To understand the business situation, at first, we need to understand the aspect of your company, of course. How well your business was doing before the crisis and how much financial stress your business is suffering. And for the customer also, ask customer how much they have seen their sales drop and work together. For company's aspect, you can compare your business record between the last year and this year. Then you can understand the severity of the damage. For analyzing current business condition and planning for future, break-even analysis is used. And break-even analysis is good for understanding the financial structure of your company. It is also useful to set the necessary target for the sales and cost also according to the profit target. How to do break-even analysis? I will explain more detail in a later slide. At first, divide fixed cost and variable cost of the total cost of the business, and then compute the sales amount, which become equal to total expense, and then utilize the fixed cost and variable cost ratio. That's the simple explanation, but I will explain later. And once break-even analysis is complete, you will get to know how much you need to sell to be profitable. And also, you will also notice that how much variable cost to be decreased or the fixed cost also. Term used for managerial accounting. A break-even point sales is a sales point at which the sales and total expense become equal. So if the sales is higher at the point, you will get the profit. If it is lower, deficit is made. Variable cost is incurred proportionally to the sales volume. The cost is, for example, material cost or subcontract expense. Variable cost ratio is the cost ratio to the sales amount. Marginal profit is deducted from sales to be deducted by the variable cost. So if the sales is more, marginal profit becomes more. On the other hand, fixed cost doesn't change according to the sales volume. And operating profit is from sales to be deducted by the variable cost as well as fixed cost. Let's look at the image of break-even analysis. Yellow part is the variable cost and the green part is the fixed cost. Variable cost becomes bigger when the sales amount becomes higher to the right side of the graph. But always the cost ratio to sales is 60%. Red dot is the break-even point. So at the point, variable cost is 60%. It means that the fixed cost is 40%. So when the fixed cost is divided by the 40%, it can compute the break-even point sales. Please look at the formula at the right side at the bottom. Fixed cost divided by 1 minus variable cost ratio is the break-even point sales. In the same way, necessary sales for the profit target is computed. For example, target profit is 20. This is added to the fixed cost of 30. So the total of 50 is divided by 40% to compute the target sales point. So this is the same way. This is in a profit and loss statement format. Result is in the left side and plan is in the right side. So if operating profit to be 20 for the target, and together with the fixed cost of the 50 is divided by 40%, the sales target of the 125 is computed. Then variable cost and marginal profit is computed. So the target is done from the operating profit. This is a target PL utilizing break-even analysis. Normally, target figures are used for the annual target, but to make it more simple, I use it for the monthly target. The sales and variable costs, also the fixed costs, the figures can be changed for each month, but the operating profits target of 240 for the year has to be achieved because it's a necessary target. About the benefit of break-even analysis, regarding planning, you will know exactly how much you need to make for the longer term. And also that if you expect sales will decrease for a certain period, you have alternative to decrease variable and fixed cost. And for the goal, since break-even analysis can make it very practical target for the sales or products to be, how many products to be sold or how much cost to be deducted. So it could be a very good motivational tool for you and your employee. Action plans are needed to achieve the target or adjust the target. For sales to be increased, there should be actions. I put some example. These are related to marketing activities. And to decrease variable cost ratio, we need to improve the productivity through these actions. Also, to decrease, to lower the fixed cost level, we also need to check the expense account if there is any extra cost. So these are related to the Kaizen activity, which is continuous improvement of the operation. So this is the end of the lecture 2. If you are interested in financial management, please apply for Complementary Remote Consultation from the following URL. I also put URL link in the YouTube video description. Thank you.